I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews with Edan Yago, co-founder of BitcoinOS. Yago, welcome to the show, and thanks for taking the time.
Thanks for having me.
Yeah, excited to dive into Bitcoin, institutional yields, cross-chain interoperability with other blockchains as well, and your expertise in Bitcoin and more on BitcoinOS, which just launched and finished a fundraising, which we'll dive into everything. I'd love to start out our conversation by, first of all, hearing a little bit about yourself, your experience in blockchain and Bitcoin, and how that led to launching BitcoinOS.
Sure. So I got into Bitcoin by reading the wrong white paper. I was working on AI back in 2011, read the Satoshi white paper, and I've been building in Bitcoin ever since.
Wow. That's awesome. And yeah, inspirational document just passed its 17-year birthday a couple days ago.
That's
And,
right.
um, and we're still pretty early, especially now that institutions have gotten involved and maybe changed the game a little bit. I'd love your insights on that when we get to the institutional part in the last 2 years. But maybe you can start by explaining more on what is Bitcoin OS, and we can dive into all that.
Sure. So we've had this really weird ride over the last 10, 15 years where there's this big network. Yeah, even though it's 17 years in and there's been a bazillion competitors to Bitcoin, Bitcoin remains by far the absolute dominant asset and blockchain in the space. And despite that, um, we have this weird split between Bitcoin, where it's got, I think the reason it has been so successful is it's got one property that really none of the others have, which is that it is completely reliable. It does not change. It does not have leadership. It cannot be changed. It is like a force of nature rather than something which is managed arbitrarily by humans. And then you've got all of this other stuff which has been built in crypto, which is innovative and has developers trying to push the limits and has all kinds of features like privacy and scalability and smart contracts. And really what we're doing here is we're building, and I think we don't frequently express this, but we're building an industry around a new way of delivering borderless, immutable, uncensorable property rights to the world. And what that requires is not software. Software upgrades all the time. It's not reliable. It's not something you're going to put, multi-decade or perpetual assets on. And so that is why Bitcoin has maintained this absolute dominance in the space. But at the same time, you need an economy to be able to have the ability to have DeFi, to have organizational structures like DAOs, to have business logic like smart contracts. And so, because Bitcoin hasn't developed that up until now, we've seen this massive fragmentation of the crypto space, not just between Bitcoin and crypto, but even within crypto itself, deeply fragmented. Now, this has impacted all of us, right? I think it's meant that because we don't have secure property rights in the sort of part of the industry which is most innovative, it has unfortunately sort of degraded to being mostly a giant casino, very self-referential. Um, and that's hurt crypto. On the other hand, people like me, I've been, accumulating now Bitcoin for 15 years. I don't want to just think of it like the way a dragon thinks about their gold, just sit on it forever. I want it to be an asset which I can pass down to my children and their children, but at the same time for us to be able to utilize it, to get some of the value out of it by borrowing against it, utilizing it as collateral, generating yield, ideally never having to sell it. And I can't do that. No one can really do that today with Bitcoin without going through a centralized intermediary where you're giving up the primary benefit that Bitcoin was supposed to have, which is that you don't need decentralized intermediaries whom you have to trust. So it's been bad for Bitcoin and Bitcoin holders. It's been bad for crypto. and it's also been to a certain extent problematic for us, our ability to sort of build the new financial world uh, on crypto, because we need to have this combination of features and functionality with secure property rights. So that's been the big problem, as I've seen it, and it's an issue that isn't new. We observed it sort of in the early Bitcoin community, Bitcoin talk many years ago. This problem was identified, but how to solve it has always been a challenge, because you can't. For very good reasons, turn Bitcoin into software which upgrades constantly and is constantly adding new features and constantly sort of the code base is growing the way that Solana or Ethereum do. And so my life's work has been in trying to solve this problem. And what BitcoinOS represents is, I think, the first expression of what we always knew would be the solution. And we've been discussing within the Bitcoin space for at least 13 years, which was the ability to bring all programmability to Bitcoin through ZK proofs. And so a year ago, after many years of work, we managed to demonstrate ZK proofs on Bitcoin without changing it for the first time in block 853.626. And since then, BitcoinOS has been building an operating system that allows the full gamut of smart contracts, scalability, privacy, and even integrations of entire other chains into Bitcoin to become a reality.
It's very cool, Yago, and I completely agree. If you're going to be holding, the greatest returning asset of all time, and you're planning to hold it for multi-decades or generations to your kids, it'd be great to utilize that for a yield or borrowing against it, and without having to go to the bank and do it how you did, because the point of Bitcoin is to have it on chain. We want to have control of it, and while still earning the yield without having to give it to the bank. So I would love to see exactly how that happens. And with the ZK technology, there's been a lot of buzz around zero knowledge proofs, and I think people who it's a complex topic, but people who hear about it at first, they think, okay, it's like you can prove something without knowing all the details. With zero knowledge, you can prove it, or for privacy's sake, or for confirming. But actually being able to integrate decentralized finance and other financial products into Bitcoin natively is like taking the next step. Maybe you can dive into that a little bit more on how exactly does the technology work, and maybe if there's somebody, for example, that's holding Bitcoin and like yourself, they're planning for a multi-decade holding and they're not technical, they don't understand ZK, but they want to use something like BitcoinOS to figure out what utility they can bring to the Bitcoin. How would that work?
Sure. So maybe let me start with this idea of smart contracts, which Ethereum sort of created the paradigm of smart contract chains 10 years ago. And the way it was done was actually not really using that much cryptography. So what is smart contract? The smart contract is verifiable computation, right? Computation that you run and everyone can check that you ran the computation correctly. So what they did in Ethereum, what Vitalik effectively proposed was, imagine this is a piece of software, right? It's got a whole bunch of different things, right? Maybe you're making a trade and it calculates like how much of one asset you're supposed to give up and how much another asset you're supposed to receive, right? It's basically a set of calculations. So what Ethereum and literally every single smart contract chain has done since Ethereum introduced it was create smart contracts which are verifiable compute by taking the entire piece of software, all of the data associated with it, all of the interactions associated with it, the entire VM, shoving all of that into a block. And then having every single node on the system rerun the same computation again and again and again. So what you do is, instead of sort of getting what has been called the world computer, you get a whole world running very simple computations over and over again. You get verifiable compute via redundancy, smart contracts via redundancy. What ZK has allowed, right, zero knowledge cryptography allows, is it allows you to take this same piece of software, and instead of running it on every single computer that is, and forcing every single computer that is connected to this blockchain to rerun every single computation, one computer or a small number of computers can run a computation, and generate a proof that they ran this computation, a unforgeable proof that you ran this computation. And this proof can then be verified, validated by the network. And this sort of was the big leap forward that we were able to demonstrate and that we're bringing to market. It's for the first time we have verifiable compute. We have smart contracts via cryptography rather than via redundancy. And this is huge advantages. It has big advantages for scalability, big advantages for efficiency, and big advantages in terms of it allows us not just to bring this to Bitcoin, but because we've separated the smart contract from the chain, right, and require only the proofs, we can now have smart contracts that can operate across multiple different chains simultaneously. And so for developers, that means the ability to build applications, right? You build an application once and you can launch it to the entire world of crypto instead of to a specific chain. And so for users, that means much better UX experience, much deeper liquidity, and not having to really worry. I need to go to use this chain for this particular app or this chain for this particular app, but turning the entire world of crypto potentially into an environment which is more integrated, more secure, and feels more like the internet.
No, that explanation really helps, especially what you said at the end there about having the smart contract and then you can run it on multiple chains, because that's a huge issue right now with digital assets is the fragmentation of liquidity. The other block, Bitcoin is the largest, and Ethereum and Solana, but there's other chains, and like if we could just all work together, it would be faster, cheaper, less work.
So a lot of people sort of interpret what I'm saying as, okay, now we don't need Ethereum or Solana or Cardano or all of these other things, which in a theoretical sense, you potentially could see that happening. But I think what's much more likely is that we now finally can have these chains integrate into Bitcoin, and for Bitcoin to become the trusted, neutral, integrated hub for all of crypto. Really, there's only one platform which every single other chain isn't competing with directly, but can explicitly trust, and that is Bitcoin. And so, right now, crypto in many ways is very insecure. You want to bridge your assets over, you're taking a huge risk. So, North Koreans are going to come take your money. Things don't behave in an interoperable fashion. And so by finally unleashing Bitcoin's programmability, we also unleash Bitcoin to become not just sort of the price hub of the entire industry, but the actual sort of platform hub of the entire industry. And that will allow Solana, Ethereum, Cardano, all of these other chains to actually grow much larger than they could ever have grown otherwise.
Yeah, no, that's beautiful. So with Bitcoin not being able to, as you mentioned at the beginning, not being able to, there's no CEO. We can be like, hey, add this into the chain or integrate this software. You can use the zero knowledge proof to do a small transaction, and that proves a larger smart contract on BitcoinOS that allows you to do lending, borrowing, all of that stuff without actually having to put it in Bitcoin and propose 95% of people to change the code. Is that right?
So every single thing that happens still is a transaction, in this case on Bitcoin. But that transaction is tiny instead of being massive, right? Instead of being the entire smart contract, it is just a proof. And so these transactions, sort of like the proof part of them, is actually smaller than a standard Bitcoin transaction. And so it's a force multiplier for everything that we're able to do with Bitcoin.
That's very cool, because that's also been a bit of a debate of, we don't want to clog down the blockchain's already large and the transactions already are not ready for microtransactions. So we don't want to clog it with more software and code. So that's really great. And you mentioned there Ethereum, Solana, Cardano. I saw BitcoinOS also is looking at integrating with Litecoin, Arbitrum. And you mentioned through the ZK, you can work with all chains. Does it matter that they're all running different programming languages and some of them are the UTXO like Bitcoin, but some of them like Ethereum are not? How does it all work together with different chains that have different languages?
It does matter. So the every integration needs to one degree or another, be a little bit bespoke, because every single chain is different. And it's much easier to integrate with a UTXO-based chain like Litecoin or Cardano than it is to integrate with a more different chain like an account-based system chain like Ethereum. That said, these are implementation concerns. There's no theoretical barrier. There's just a question of work. And I think one of the big advantages that we have is we have a lot of developers now who are looking to integrate their own chains or looking to integrate chains that they are working with. And so this work can be spread across a large number of developers who basically come from an ecosystem like Cardano or an ecosystem like Litecoin and do the work of integrating. So yes, it could potentially be a lot of bespoke work, but it's bespoke work that can be done in a very, very decentralized fashion by the experts of any given chain.
That's nice. And you mentioned the first smart contract ZK tech you were working on a year or years ago in block 853, whatever it was now. And now just this week, BitcoinOS has launched. You've launched the token and the platform. First of all, congratulations on that. And maybe you can walk us through what that means for the platform and for potential users.
Yeah, so we've had components of the system on mainnet now for a while. We are bringing the entire OS to mainnet now and starting to see the first integrations go live. With that, we have the first sort of programmable BTC on the Bitcoin network, ZK BTC soon. It will be possible to migrate that BTC without a bridge, so bridgeless porting of BTC using these ZK proofs into other chains. And developers are starting to build systems and actually launch systems. So we've sort of had like the first programmable assets built on Bitcoin. And so Bitcoin now becomes not just the hub for all of crypto and not just a platform on which you can have programmable BTC, DeFi for BTC, but also a general purpose ledger on which we can have any asset, real world assets, stable coins, DAO tokens, staking tokens, etc. With that, there is one component that we really need to add and be able to pay for, which is that all of this requires compute. Now, natively built into Solana or Ethereum is this idea of gas, that you pay for transactions on the basis of compute. But Bitcoin doesn't have any such concept. And so what we've done is built into this OS, so built into BOSS, the Bitcoin operating system, the ability to effectively have a gas token for Bitcoin, which we call the BOSS token, and we've now launched that token as well, allowing us, as you know, achieving a key milestone in bringing all of this to market and bringing all of it live. And one of the cool things is this asset, BOSS, is an asset which can be used for staking, which can be used for payments, which can perform transactions at a very low cost, but has been issued on Bitcoin as one of the first programmable tokens on Bitcoin using the BOSS platform.
Very cool. Congratulations on that. And that's a huge step. Bringing gas to Bitcoin. There's got to be an order of operations if you want to get your Bitcoin in there. And yeah, the fees are small, but nothing's free to get it done. And now, first of all, I just saw that you guys just closed a $10 million round just prior to the launch of the token as well. Congratulations on that. And I saw that part of it is being used towards institutional BitcoinFi, which maybe we can elaborate on. Can you touch on closing the raise, maybe some of your partners, and then the institutional part going forward?
Yeah, so over the last 18 months, we've seen a very, very significant change in who the holders of BTC are.
Mm.
Depending on how you calculate it, something between 17 and 20% of BTC today is held by institutions and professional money managers who have a different approach to how they want to deal with BTC. Up until now, BTC has mostly been held just by hodlers. Um, and the professional money managers who are now entering the space have a much different approach to how they think about managing risk, how they think about generating yield, how they think about handling collateral. And so they're looking to put the BTC to work. Now, 17 to 20% of BTC is 400 to 500 billion dollars of value currently looking to be able to be put to work. Um, just to give you a sense of order of magnitude, that is more than close to 3 times the full value of all of crypto DeFi on Solana,
Mm-hmm.
Ethereum, etc., etc. So potentially the scope here of the, there's a burning desire, an entirely new class of investor who are looking for an institutional grade DeFi that can utilize BTC, and that is proving to be one of the key use cases for what we're bringing to market. Uh, it's a problem. It's a problem which right now doesn't really have other good solutions. There are some other providers. So, for example, Babylon, they've taken a different
Mm-hmm.
approach, which has its advantages and its limitations. But that went from 0 to 6 billion overnight, um, in terms of TVL, and so
Mm-hmm.
it's an indication of the size and scope of this market now. And so we're partnering and have taken investment from some of the largest custodians in the space because they're seeing the demand within their clientele.
Mm-hmm.
And what we can help them do is turn the sort of self-custodied wallets and the BTC held by these actors into programmable BTC which could be used in DeFi without going through additional third parties. And in addition to that, we can also, over time, bring the ability to do this with confidential transactions. In other words, maintaining the confidentiality or privacy um, of transactions, which is a key component of what institutions and really all of us should be looking for.
Mm-hmm. Definitely. And that's great that you're partnering with the custodians of these hundreds of billions of Bitcoin. I'm curious, with institutions bringing in this much capital into Bitcoin, looking for yield, there's always been sort of a thought that the institutions, they don't really care about decentralization. At least the privacy maxis in some of the smaller coins, they're all about it, but it never seems to take off. What are your thoughts on, out of those hundreds of billions, do they really care if they're dealing with a third party or not? They're sort of used to it in traditional finance. Is that a requirement or just a nice to have in Bitcoin OS that you're keeping it, self-custodied?
So I think that is a deep misreading of what is going on. Institutions are interested in Bitcoin for exactly the same reasons that we got interested in Bitcoin,
Mm-hmm.
which is they want to have an asset which is um, something that they can truly own without going through an intermediary. And they want it now because the world has become more chaotic, more unpredictable. Free trade seems to be on the back foot. Governments are deeply in debt. The
Mm-hmm.
stability of institutions, even like the US Fed, are in question. And with that, you start calling into question effectively the entire sort of TradFi system. Now,
Mm-hmm.
that doesn't mean that institutions are immediately hitting the panic button and trying to put everything into
Mm-hmm.
BTC. But they are looking for alternatives. And one of the key terms that has become like the major trade over the last few months is what's becoming known as the debasement trade. This is a
Mm-hmm.
multi-trillion dollar trade. It is so big that the other asset, which has been part of this trade, gold, has
Mm-hmm.
added the equivalent of 5 times Bitcoin's entire market cap in just the last 6 months. So it's,
Mm-hmm.
$10 trillion worth of appreciation in in gold's market cap. What is driving that? It's that
Mm-hmm.
everyone from individuals to corporations, all the way through to sovereign wealth funds and governments, are now seeking to take larger positions in assets which don't have a counterparty or counterparty risk.
Mm-hmm.
Um, and that is the exact a purpose of Bitcoin, right?
Mm-hmm.
When you read the white paper, the very first thing that Satoshi points to as the problem that he's trying to solve is this need to trust third parties.
Mm-hmm.
Um, so I think it's a complete misread of the institutions to think that they're interested in Bitcoin for reasons other than what initially meant we got interested in Bitcoin.
Mm-hmm.
And I think fundamentally they're interested in the same two things. They want to have an asset which has no counterparty risk, and they want to see price appreciation.
Yeah. Yeah. Great perspective, Diego. Um, and you mentioned with the platform launch that all of the different parts are getting onto the main net. So where's that at with, say if and can retail get involved in this as well? Say I have 10 Bitcoin and I want to start staking it or lending it. Can I do that today, or is that something in this quarter or into 2026?
Right now, it's open only to a select number of institutions. We're doing this because that allows us to control the risks as
Mm-hmm.
we're sort of rolling out the system. But yes, by late this year or more likely early next year, we expect everyone with Bitcoin and really any asset will be able to start using and building on Boss.
It's very exciting. And what else, how else can you elaborate on sort of the roadmap for 2026 now that the platform is launched? Day one begins of the token launch and the mainnet platform, and more institutions are still piling into Bitcoin and Ethereum. Uh, how else do
I
you plan
think,
to grow?
well, I think there are three primary sort of markets that we're addressing. The first is the ability to provide DeFi, and that's particularly the ability to utilize BTC as collateral or to
Mm-hmm.
generate yield with BTC. So that is being built on Bitcoin and being built on other chains to address Bitcoin. And so that brings us to the second thing, which is integrating chains into Bitcoin for the first time, allowing multiple different chains not just to be integrated with Bitcoin, but to be integrated with each other through Bitcoin,
Mm-hmm.
and allow users to start transferring assets between chains without having to use bridges, and in fact, even allowing smart contracts to be deployed such that they can address multiple different chains at once. And then the third thing is the introduction of new kinds of assets onto the Bitcoin blockchain itself.
Mm-hmm.
So that is going to be things like stablecoins,
Mm-hmm.
real world assets, and we're also starting to see sort of experimentations with DAO assets, meme coins, and other sort of crypto things.
Mm-hmm.
Um, that's sort of in the early half of 2026. Latter half of 2026, I think we will start to see the deployment of the first privacy components, which will bring native privacy to Bitcoin as well.
Oh, that's very exciting. And yeah, privacy's been a hot topic recently. I'm glad to see people are still considering it, especially with the amount of transparency in Bitcoin and institutions getting in there and they're like, we need our competitive advantage. We don't want, our neighbors looking into what we're doing. So whatever market advantage we can get, we'll take it. So I'm looking forward to that, Diego. What's the best way to follow along with the introduction of, when it gets out of just the small list of institutions to open the floodgates for yield and all of the other updates that you mentioned?
Well, I think maybe the best is to follow on the website. So that would be bitcoinos.build. You can also find links there to our X account. So that's BTC_OS, where we provide frequent updates, our blog, Discord, where there is a very active community, and Telegram, where there is an even more active and interested community. So if you want to follow along any one of those channels, you can also, if you're a developer, start getting involved. We have a hackathon coming up in November, and if you're interested, you can also follow me at Edan Yago on X.
Sounds great, Yago. I appreciate your insights into Bitcoin, interoperability, opening the floodgates for those hundreds of billions of dollars in Bitcoin capital to earn yield and DeFi, and just supporting the integration of all these blockchain technologies to work together through BitcoinOS. I'll leave a link to the website and the socials and your X as well if people want to follow along in the show notes below. Wishing you and the team all the best on everything with BitcoinOS, and love to follow up in the near future.
Thank you very much.